Every major news organization has someone covering AI right now, but most of them are coming at it from tech. Madison Mills is coming at it from money. Before she became Axios' senior AI reporter, she spent years covering Wall Street, interviewing Jamie Dimon, Ray Dalio, the people who move markets. She built one of the most read financial newsletters in the country. She knows how investors think, how they hedge, and more importantly, what they say publicly and what they believe privately are two very different things. She's applying all of that to the AI story, and what she's finding is that the financial system itself may be one of the most underreported vulnerabilities in the entire AI conversation. This week, Madison joins the Friday Reporter to talk about who's really funding the AI buildout, what Wall Street is doing quietly that it won't say out loud, and what happens when the technology everyone's celebrating starts targeting the infrastructure that holds the economy together. Madison, thank you so much for being with me. I am so curious about how you've come from the AI beat. Come to the AI beat from markets. Most AI reporters are coming from tech. How does that change what you're looking for and what you're finding?
Yeah, I like to joke that the markets became so AI-ified that Axios had no choice but to make me an AI reporter, which just says a lot about how the public markets are right now. But really excited to be on the beat. I hope that my background in finance and as a business reporter sort of allows me to tackle some of the financial questions of the AI build out a little bit more. One of the very important questions when I was covering markets was about this, multi-trillion-dollar question of whether or not we're in an AI bubble. And now that I'm covering the AI companies themselves, I feel like that's primed me to answer that question a little bit more directly. It's a question that I get to keep asking the AI labs themselves, how they plan to ever be profitable. And hopefully I can use that finance background to serve both an audience of markets and investor readers and also tech readers for our AI newsletter.
I mean, you just reported that AI is raising the risk for large-scale attacks on financial infrastructure and targeted fraud that could potentially drain accounts. That has, I think, a lot of people sort of feeling a chill in their bones. How close do you think we are to that being a real crisis?
The conversations I've had with finance executives, particularly off record and on background, paint a very scary picture about the fraudsters winning right now. And I think that's why you're seeing the AI labs releasing their best models to specific key partners first. Their idea is that if they give these models just to the good actors, the good guys first, hopefully the good guys can then use those model capabilities to prep their systems to be able to withstand any attacks that could come from more nefarious actors down the line. But then that's kind of the pessimistic view. The optimistic view that I hear from people is that AI has increased capabilities, increased financial literacy opportunities for people too. So then there's also kind of this net benefit of AI as well, but certainly something that the bank sources I talk to at these finance firms are very concerned about.
I love that you say that, though, because I do think that so many of the prompts that we're seeing out in the world are encouraging folks, small businesses like myself, folks that I know that are looking to figure out better ways to really approach their financial portfolio, and their literacy is really been informed by some of these the prompts that are out there, and that's incredibly interesting.
Yeah.
But that is the plus side of all of that.
Yep.
It sounds like in your reporting too that you've talked to over a dozen of these Wall Street analysts about sort of what is real as it relates to 26, as it relates to AI. What other things are you hearing that they will say perhaps to you off the record, but not necessarily publicly?
I think one of the things that I hear a lot is that the AI investment concentration is bigger than we might talk about. So, for example, I had a source talking to me about how in a small town that has a big data center build out, one of the regional banks in that town is doling out a lot of small business loans to everything from truckers to construction companies because these companies are getting a lot of demand from the data center build outs in those towns. On paper, those aren't going to look like AI loans, but they are. And if the data center build out doesn't come through, those loans are going to be on the hook regardless. And so that's an example of the degree and spread of this kind of systemic risk in the financing of AI that I think we are talking about all the time, but that to me felt like a really good example of just how broad the risk has gotten.
Mm.
But then at the same time, I was talking to someone at JP Morgan yesterday, and they were saying that the private credit risk is infiltrating the financial world at about 8%. When you looked at exposure to mortgages in the financial crisis, it was over 50%. So then you hear a stat like that, and it's a little bit less alarming, but there still is that exposure. And what's different this time is that we have even less clarity about how much exposure there is. So it's not even certain that that 8% number is accurate, just because of how dispersed these loans are and how they're being accounted for too.
That's amazing. I talked to another analyst colleague of mine that's in this space that's kind of in a nice intersection of this particular conversation, and shared with me that data centers are the new fracking.
Yeah.
Remember how fracking was a real discussion about whether or not it was worth the risk, it was worth the investment, it was worth looking into. Data centers are that's the new comparison that we can make to the two, and sort of interesting way to think about that.
Interesting. Well, and I've been working a lot on stories that compare the AI build out to the energy build out. So that's a really smart comparison. One thing I'm working on right now is this idea of token costs, and tokens are it's just like a term for credits that we use when you're putting a query into an AI model. All of those take up tokens, and that's kind of the currency of the AI build out. And tokens are becoming an increasingly important part of our economy, the same way that oil is obviously a very important part of the economy. So it feels like we're moving from this petrodollar system to a token dollar system. And that's something that I'm spending a lot of time thinking about and talking to sources about too.
When you follow that build out
Mm-hmm.
and you follow the money, who's funding it? Like, at what scale? Like, what are they expecting in return?
Well, the funding is coming from a lot of different places. Obviously, a lot of the major banks are in this build out. It's a lot of the hyperscalers themselves. That's a collection of about 5 of the biggest cloud companies. You think about Amazon, Meta, Microsoft. And just those 5 companies are on track to spend nearly $1 trillion on AI infrastructure this year. So that's not just data centers. It's also compute costs, chips, everything that has to go in those data centers is extremely expensive. And the thing that's a challenge is that it's not really clear when those expenses start to fall down. It seems like this just keeps getting more expensive, and that's obviously the opposite of what you want to see.
Sure.
Compute costs are going down. So like the cost of servicing AI queries is going down, but demand has exploded so much that it's actually still more expensive to service that demand, even as the compute input costs are going down. So all of that paints a picture of trillions of dollars being put into this. Unclear when these companies are going to be able to stop putting so much money into this. But the problem is investors and the companies themselves don't have any appetite to slow down because they have so much confidence in AI being a once-in-a-lifetime investment opportunity. And if you're a company like Google, you feel like AI could really hurt the moat around your business too. So some of these companies feel like they don't have a choice but to spend, billions of dollars on this. But it's tricky because obviously part of what investors have liked about tech is that these are very cash flow positive companies, and AI is really changing that. So it's a very different investment case for these companies now than it was, say, 10 years ago.
Sure. What do you think, having come from markets, what do you think that tells you about where AI is headed? Do you have any early indication, any clues about that?
In terms of how the market has indicated where AI is heading?
Yeah, in terms of specifically.
Yeah, I mean, there's obviously a lot of froth in the market around AI. About 7 of the biggest tech companies now make up nearly 40% of the S&P 500 on a market cap basis. So a lot of concentration in those names. That sounds pretty frothy to a lot of investors I talk to. And when you have, there's the Warren Buffett quote of when there's fear, you can be greedy, but when there's a lot of greed, you want to be fearful. And it seems like there's a lot of greed around these tech stocks right now. Even this week, we've seen this massive recovery in tech stocks, one of the fastest market recoveries in history. So that makes it seem like the sentiment is perhaps too optimistic right now. And when there's that optimism, there's obviously the chance of investors being caught off guard. It's really hard to, if I had the answer to whether or not the AI bubble was going to burst, I wouldn't be a reporter because I'd be a millionaire. You know what I mean? So
or more than that. Yeah, maybe.
Exactly. But I can say that historically, when we've seen the market get to these kind of bubbly levels, there has been disappointment. Now, what's interesting is that in this particular moment, we just came off of such a strong market sell-off that actually did take a little bit of froth out of the market. So maybe investors are a little bit more prepared at this moment and more accurately priced to the potential of AI than they were, say, a year ago when the S&P was trading at 30 times forward earnings, which was very similar to the price and valuation of the S&P that we saw during the dot-com bubble, which is obviously priced for perfection a little bit more than we're at right now.
Well, I mean, there is a huge debate about AI itself in Washington, Wall Street, about whether or not it creates or kills jobs.
Mm-hmm.
And that to me, I mean, you've reported quite a bit about productivity gains that could actually lead to more employment.
Yeah.
Tell me a little bit, make that argument to me as someone who is still open-minded about where I stand about whether it creates or eliminates jobs.
Yeah, I mean, that's another thing that is so company dependent. And one thing that's also really challenging as a reporter is that companies know often, especially if they're public companies, that they can kind of paint a really positive story to investors by saying that they're doing layoffs because of AI. Like that sounds awesome to investors. The profit expansion opportunity there sounds great. This is something that we saw with Block, for example. And then when I've talked to employees at those companies, it's not necessarily clear to me that was all because of AI. So that's why I have a little bit of doubt about whether or not AI is already replacing tons of these jobs. Having said that, especially entry-level hiring, we are seeing taking a hit. I think there's an 8% decrease already in the amount of entry-level hiring that we're seeing for this year. And that makes sense given what AI is currently capable of doing. But some companies I talk to are, especially at the banks, they're going all in on entry-level hiring, and they want entry-level workers in part because they see young people as tech savvy and as the type of people who can help them make sure that they're not just using AI, but using it smartly and efficiently. And so to me, it kind of feels reminiscent of what we saw with social media, where young people were the ones at companies making sure that they were ahead and using social media to reach audiences in a smart and creative way. I feel like if young people can do that, that might be a way to hedge their hiring when they're early career, but that group does feel the most at risk when it comes to the hiring question for AI.
Let me say this out loud to my 18 and 20-year-old children. Yeah. Please listen to Maddie when your mother tells you to learn how to program and understand and use AI, because that is the biggest thing that we think about, right? But also too, like as someone who works with those entry level and mid level folks in the marketplace and in the workforce, I actually more than ever before am learning from how they approach not only the use of AI and social media, but also how they have never known a world without these tools. Mm-hmm. They've never, I mean, yes, AI is new in the marketplace, but for the most part, like the entry of technology in my career, as opposed to those who are newer in their career, it's a completely different ballgame. So, okay, I'm just making with a highlighter all of the things that you just said, how important it is.
Well, and I'd be really curious your take on this too, but I think there's sometimes a misconception that people who are more senior in their careers are kind of hesitant to learn AI tools, don't want to do it, would rather, retire early than learn these tools. But I'm actually seeing the complete opposite. The people that I know who are senior in their careers, especially those who want to keep working longer, feel like, oh, we really have to be ahead on this or else our jobs could also be at risk because these are people who are getting paid a lot more than entry-level workers. So there's a lot more at risk for them. And I'm seeing them in some cases be the real AI evangelists at the companies that I talk to.
There
So
are two
they're saying
schools
that
of thought. Two schools of thought. You're absolutely right. There are those who think that AI is cheating, right? And that, by the way, is probably where my head was 6 or 8 months ago, that, using it is a crutch and it makes you less good. Today, I am fully 100% learning all the time. Like, how do I build projects? How do I understand how to use the platform? I'm not using it as a search engine anymore. Like, I myself am far more interested in how do I use it. Also, too, like, I am a person who has quite a bit of I have a solo practice. So understanding how there are ways to take systems that I already use and turning them into something that can be supported by AI is fascinating. So there is a lot that's in that pipeline that's different. But I want to get back to a little bit about you're everywhere and you have like this remarkable experience from the markets itself. You just were at Human X talking about business reality of AI adoption. And we talk a little bit about the gap between where people are. Tell me, what do you think's happening in the various organizations? Is it still very varied? It sounds to me like it's very different based on who you're talking to.
It's different based on who I'm talking to, but the organizations I talk to in finance in particular are all in on AI, in part because, especially the banks that are based in the US, like these are the bastions of security for the rest of enterprise. And so they feel kind of a responsibility to be ahead on this. And also they have to be secure from a regulatory perspective. So they are all in on making sure that they can use these tools as a form of defense before it's used on them as a form of offense, right? So that's something that I'm seeing a lot of the banks innovate on. What's interesting is the AI companies that I'm now spending a lot more time talking to, they're having a really interesting moment because of the cost of adopting AI. That's not just about like the monthly contract you think of for Claude that's $20 a month. These are people who are doing what's called token maxing, which is when you're trying actively to hit your usage limits on each AI platform. And that gets really expensive really quickly. I talked to an AI lead at NVIDIA who told me that for months, they've spent more on tokens than they have on labor. So that's another thing that's super interesting is, are we going to see companies spending more on AI than people? What does that do to the idea that AI is so much cheaper than people? And that's also part of the profitability question for the AI labs too, and the tightrope that they're going to have to walk. So it varies by enterprise, but it's been fascinating to see this switch of, we all have to adopt to AI very quickly because it could save our company a lot of money, to actually, it's costing us money, but the tools are so good, we don't want to stop regardless.
I will tell you that I was recently with the head of a public affairs firm in Washington. They're a multinational firm, so they're owned by a bigger conglomerate, but they had just downsized quite a bit and were told that productivity expectation was to be up. And so much of that was about the integration and the use of AI. So less workforce, more output. And there was a lot of figuring out how that looks and what that looks like, especially even in the public affairs space. So I can imagine that it's even more active and busy in a space like the markets.
Well, and that's such a truth that I have just heard from every single company that I have interviewed, is that people are busier now than they were pre the rollout of AI tools at their businesses. And this is something we've seen historically with other tech innovations. Like, I had a source at Stanford compare it to the creation of the washing machine. There was this idea that like we were going to have so much free time. And obviously it's great that we have those tools, but we're not all sitting around not knowing how to spend our time. We just got more busy and more productive. But I think that that's like a super interesting part of the AI story, is how, in a way, people are working more now that they have access to these tools.
Interesting. Maddie, you made a move from one of the most read markets newsletters in the country to the AI beat. What did you see coming that made that the right call?
part of it was that the markets beat was so intersected with AI, and I wanted to be able to tackle that AI bubble question that I do think is the question for the markets, but also the question for our future, really. I feel like AI is this once in a lifetime story, potentially once in multiple lifetime stories. And I really saw an opportunity, and my co-founders, Jim and Mike, saw an opportunity for Axios to be at the front lines of the AI build out. And so was just really thrilled to get the opportunity to be able to switch over to the AI beat, and I can kind of still rely on and dip into my first love of markets as often as I want, but also get to talk to the AI labs themselves, talk to people who are building this technology. And I have a clearer sense now of what the tech world thinks about the AI build out versus just the Wall Street world, which is a very different perspective. So excited to be able to continue to build out that sourcing in the tech world going forward too.
Well, we're all watching, and you're doing a great work. Where can my listeners find you at Axios?
Yeah, so I'm at Madison Mills for my byline, and you can subscribe to the AI Plus newsletter. Myself and my colleague Ina are authoring that Monday through Thursday, and then our policy team writes the AI newsletter for Fridays. I'm also on all social platforms. I do a lot of social video content on Instagram and TikTok, so you can find me there as well, under Madison Mills, and then LinkedIn, all the social places I'm around.
I love that so much. This was such a good conversation. I cannot wait to keep up. Let's stay in touch. Thank you for being a guest today.
Thank you for having me, Lisa.
Well, thanks for joining me. That was super fun. I'm looking forward to a really busy and exciting 2026. Big thanks to my production team at Two River Pictures. And another really important thanks to my friends at Be the Brand Collective, who helped me with marketing and making sure the word gets out about the show. I'll see you again for another episode. Thanks so much.